job is simply to source post-seed startup opportunities for investment. We invest post-seed to pre-IPO. And I would love to talk about just what the venture capital asset class is today, because even many investors aren't sure. So if I have...
Yeah. Let me find Jason, where are you?
So, going over venture capital and regional growth, what we see is that venture capital is an economic multiplier innovation regionally. So, what is venture capital? Let's define the asset class. Where usually you may buy, trade, hold stocks, bonds, and so on. The startups represent high growth equity that comes out of a team forming, building a product, and I think like the last speaker said, seeing a need, filling a need. We provide capital in the venture capital asset class to early stage, high potential startups, and yet after those startups are funded, you continue to invest. It's not like bank debt. As a venture capitalist, I or any other would take equity in exchange for part of the company, and then returns are distributed to your players afterwards. It's a long-term growth play. High risk, but high reward as well. I love technology. At Alumni Ventures, we have a lot of different swag, as you might call it. And one of them says, I'm a tech enthusiast. I say this because sometimes we try to get tech to work as best we can. I'm grateful that there are a burgeoning number of entrepreneurs coming out today. I wonder if I can get someone to help me. I'm not sure this is working. You guys are wonderful. I think the idea here is to, I think the thing is working here. I'm trying pressing up and down. Is there a place I should point it to? Thanks, guys. We're always very technical things everywhere. So, where are we looking at VC? Where does it belong? It belongs in the sort of umbrella category of alternative assets. In that, we've really got four large pillars. With private equity, if you think about firms like KKR and so on, real estate generates about 47% of the wealth of this country. And then you have commodities and hedge funds, which, depending on your exposure and your ability to source $100 million deals plus, your mileage may vary. But venture capital is early stage venture capital. You look at organizations, accelerators like Techstars, Y Combinator, and also large firms like Andreessen Horowitz or Sequoia. So venture capital typically represents about 5 to 15% of the institutional allocation of alternative investments, which essentially means because this is a business where you're funding from unbankable to highly bankable companies that are building in real time, there are stages. So there's seed stage, the team is there, but They need proof of concept. They're building their initial product. Series A and B, product market fit. They have a product. There's demand. There is buying in the market. Their business is growing. At the growth stage, these organizations rapidly expand. Their goal is to dominate the market to the extent that their presence makes it difficult for other later market entrants and current market participants that are less productive. It's a very meritocratic asset class. And of course, exit, IPO or strategic M&A from investment bank. What does venture capital do for geographies? When venture capital comes in a massive number, say through a startup accelerator like Y Combinator, or through something like Andreessen Horowitz, for every one high-tech job created by a venture capitalist funded startup, you get 5 to 8 additional jobs in the local service economy. It could be anything from IT, it could be health, it could be collectibles, so on. Wherever that economic growth is wherever that economic growth is coming from, the adjacent industries are going to benefit. So by bringing venture capital to any geography, you increase the economic value over time more than it would have in the first place. And this really contributes to a clustering effect. The more venture capital comes into a geography, the more startups, the more talent, more overwhelming revenue combined in these markets feed each other. It becomes a sort of symbiotic effect where VC feeds innovation, feeds talent, feeds jobs, fuels economic development in any geography. The resulting density of talent, you have the opposite of brain gain, more knowledge, more specialization, more labor force that can be valuable to that geography or others. Active VC, invested ecosystems see very high resilience economically because startups and their teams come from everywhere. Their products and their ideas represent more than just what's in front of you. So you have these highly diversified solutions all over the world. The more you can invest, the better for you, the better for others as well. Like I said, not only is VC talent management, it creates better tax infrastructure to support the growth happening. And that leads to strategic R&D in those technologies, creating those products in those geographies. That just makes it a positive feedback loop. So VC is inherently good for economic growth. 85% of patents come from VC-backed firms. That's a figure that's out there, publicly known. While 47% of the wealth in this country might be generated from real estate, that's not a percentage of output of patents, output of business value, so on and so forth. VC-backed firms do the most of this, and yet it's not a widely known asset class. One huge market that VC is benefiting right now is deep tech. Deep tech already creates billionaires. So why is that though? Because deep tech is an umbrella: AI, quantum, cybersecurity, blockchain, etc. So you have these critical industries that can buff up your national security, can improve every industry. AI is taking over everything right now. Venture capital firms that fund these sectors become the world's greatest decision makers and enable other people to follow in their footsteps. People like you, people like those in this room who want to create companies. Venture capital is a good answer for you. We provide the patient capital venture capital is required for projects that would be moonshots or, oh, this is impossible. No. Venture capital steps in and adds value. More than usually even government grants can give. So that's really all I have to say. I would love any questions anybody has. I'm raising a $10 million fund to fund Duke Tech here in New York, pre-seed. I would love to talk to anybody who's curious. Thank you so much.
Thank you, Simmons. Thank you very much.